Hey traders, welcome to Charts and Coffee. I drank all my coffee and I thought I'd rather not be over caffeinated for the morning, but hopefully everyone out there is ready to caffeinate and dominate. All right, gang. Happy Thursday, everybody. Hope everyone's doing well. It's been an interesting week. Lots of recalibrating to some, I won't say small, but not dramatic changes in expectation, but again, none all the same, fairly hawkish shift when we're talking about not just 1/4 point hike more, but rather 2/4 point hikes more come December, and possibly a third early next year. We're talking about a 1/2 point to 3/4 of a point more rate hikes from the Federal Reserve as we hit the, oh, right, hang on. Thanks, bot. Hang on. I forgot I got to broadcast to the free trading room. Give me one sec, gang. Bear with me one moment. All right, so we're taking a look at, by the way, for those of you that are not familiar with this view, please do get familiar with this view. This is the target rate probabilities from the CME FedWatch tool. If you Google that right there, if you Google CME FedWatch, what that will do is give you the very first search you'll see. The result is going to take you to this site. So once you're there, you want to take a look at the December target rate probability. Why did we sell off the way that we did on the CPI? Because the CPI triggered an expectation for more rate hikes. How many more? We don't just guess. Remember, gang, if you want to guess and if you want hyperbole, turn on the television. Mine is off. And when it is on, it's muted. But the only time I watch that station is when Shark Tank is on. So, I have my own ideas. I have my own way of measuring. The difficult thing about listening to anybody else's, including my analysis, is unless we are talking about time frame and time horizon, we might as well be speaking another language. So if any time, and that's why I always like to remind, and I haven't done it in a while, so that's on me. If you have a question, ask me. Rog, I want to look at, I'd like to look at Microsoft. Daily time frame, for my portfolio, or daily time frame for a swing trade, or I'm interested in day trading, right? Because right away, I'll be able to categorize that as maybe a 5-minute time frame, a daily time frame, or a weekly time frame. If we're not specific to time frame and time horizons, whatever the levels are, don't have context. Keep that in mind anytime you're listening to anybody out there, including myself. Taking a look at target rate probabilities this is not a day trading conversation, right? Although the immediate adjustments made to this are going to create volatility. So keep that in mind whenever I'm looking at this. This isn't about day trading. It's a little bit longer term, daily or weekly. So as long as we're having to adjust to slightly higher, ultimately, target rate probabilities, we're going to see the equity markets under a little bit of pressure. Why? Because higher rates mean a little bit of downward pressure on equities. All right, having said that, this big candle, we adjusted to what we expected, and the target rate probabilities didn't change. We made an immediate adjustment of a 1/2 point hike, 1/2 point worth of hikes more. By the time we get to December, by the way, the thing that everybody on television was freaking out about was, we could see a full point hike in the next for the September meeting, in the next meeting. And that has pretty much been for now. I know it's not Tuesday or Wednesday 1:59, but for now, that probability is far lower. This is the 3/4 point hike, by the way, column. which is now what we would consider to be fully discounted because it's at 80%. Do I ever know that it's 100%? 100% is so ridiculous, as if I've surveyed every human on the planet with skin in the game. But once we reach 80, I think the Pareto principle applies. We've now hit that tipping point. This could be, considered to be broadly, fully discounted, right? I say fully, not really meaning 100%, but mostly, right? Okay. That's what we're dealing with right now, gang. And that's why, by the way, why aren't we collapsing? I mean, gosh, isn't that what's supposed to happen? I recently tweeted, because it just entertains me to tweet. I love Twitter. If warnings of a crash, and how long have we been hearing about crashes? Let's see, 1, 2, all year long, right? All year long. If warnings of a crash were a drinking game, we'd all be passed out by now. So eventually, if someone keeps saying month after month after month, we're going to crash like a broken clock, they're going to be right. At least twice, right? Or like a blind squirrel, they're going to find a nut eventually. That's not trading, is it? That's just saying the same thing, hoping eventually you'll be right, and then coming back around to throw the confetti on yourself, right? And say, see, I told you. That's what television really is all about. All right, I'm done ranting. But this is what we're dealing with right now. We're not collapsing. We're not taking out those September lows. For those of you wondering, Rog, why are you bullish? I'm just not bearish. Remember, the mind wants to be binary. Well, if you're not bullish, you must be bearish. Not so much. I can be neutral. I could be short term. I could sit here and not give a rip about what happens in December. I could. I can't say that's the truth. I do care. But if I'm a day trader, think about it. If right now and all the talking heads is stressing you out, and I get it, shorten the time frame, because then you're freeing yourself to say, I don't care what happens tomorrow because I'm starting with a blank slate, 0-0 ball game, if you will. Every single day, fresh eyes, fresh trades, and we get to do it all over again. And that sometimes is a really, really powerful thing. So keep that in mind, depending on where your stress level is. Shorten the time frame, shorten the time horizon. The funny thing is, the other thing that works really well when you're confused or concerned, right? It may not be confusion. Raghee, I'm not confused. I know I'm concerned, right? No problem. Lengthen the time frame. When I was on Benzinga this week after the CPI, I said, look, we care a lot about this right now at 8:35 a.m. and we might care about it today. Am I going to care about it a week or two from now? Probably not, because by then, new data, FOMC next Wednesday, will have eclipsed that. If you're really concerned about the now, shorten or go further out. Ask yourself, how can I position myself and control risk and have perhaps a 6-month time horizon, right? So these are things you can do so that you're not looking at a time frame and saying, Rog, I don't know what happens next. And listening to all these people has scared the heck out of me. Turn them off. I think I went off on Tuesday in the free video. If you haven't checked it out, I have to say it was a fairly epic breakdown of what's going on, both psychologically and on the price charts. So check it out. I loathe fear mongering, only slightly more than I loathe folks who want to tell you what's going to happen tomorrow. So let's go ahead and jump into the best part of the show, gang, which is your questions. So let's do that. Let me get these other charts out of the way. All right. So what we want to do is just remember the time frame and time horizon. Please, gang, listen to me now. Believe me later. It's going to save you a lot of heartache. All right. First question. First up is a lot of people, including some very famous ones, are saying Fed interest rates can reach 9%. Unless it's Jay Powell saying it, we, right? PP family, I don't care what famous people are saying. The only thing that I care is don't tell me your 2020 results. How are you doing so far this year? Not you, whoever's saying that. How are you doing so far this year? And how did you do, say, late last year? Because that's when the monetary policy shifted. Gang, just because everybody, you all do know how people get on television, right? And I'm saying this, PP family, so just so you can put this in perspective. I've been on television. You know how it works? Either you're a hedge fund manager. By the way, Do capitalists actually care about you and I? I don't presume that. Talk about naive. They're out there to talk their book, or if they just feel like being on television that day. They don't need to be on TV. No way, right? So the rest of us mortals, if we want to be on TV, I can pick up my phone, right? I can make a phone call to a PR agent who someone, either myself or someone else, has paid money to on behalf of me and gets me on TV. That's how it works. No one's asking me how'd you do this year, Rog, and how is your trading going, and what's your current portfolio? No, no. You get PR, or they need to fill hours, and you just end up in the rotation. That's how it works. So be very cautious thinking people that are on TV are there because of some merit. They're there because of the PR machine. Been there, done that. That's how I got on TV before, right? That's how that works. So I say that not to belittle the people on TV, but to give you a little bit of an idea of that's how these people get on TV, right? It's a PR machine. So the markets are expected to correct an additional. Hey, you know what, PP family? I'll tell you this again, going back to I don't know the future. I don't. I play probabilities. And in that interim of I want to enter here and exit there, I control risk. That's it. Now, I don't know why nobody says, gosh, clearly whoever's on television, you can see the future, right? This is where fear turns off the common sense machine. So here's one thing you can do, PP family. I'm a football fan, or it doesn't matter the sport. If you like F1, if you like football, baseball, whatever it is, right? If so, and I think the Dolphins play the Bengals in a couple of weeks. I'm in Florida, so we'll talk the Dolphins. Imagine if I said the Dolphins are going to win. They're going to win in the fourth quarter, and this is the score. You'd say, Rog, you're guessing. Maybe you're looking at some probabilities, but that's a guess. That's what the folks on TV are doing. They're telling us the football game that's going to, and sometimes they're talking months ahead. So imagine if today I tell you, hey, Tom Brady and the Bucs are going to win the playoffs. They're going to beat the New Orleans Saints, and they're going to do so with a run play in the third quarter, and the score is going to be 27-13. That's what they're doing. So if we were to replace the sports analogy with the financial analogy, we think they were bonkers. Yet for whatever reason, we believe these people. I hope that makes sense, PP family, just to give you another way to change the narrative in your mind. Okay, so I trade what I see. I've never been able to predict the market. I just trade what I see. I see what the support is. I see what the resistance is. I see what the volume is, and I try to trust that. Okay. Hey there, Avi. How meaningful is a 50% weekly Fibonacci? We are trading slightly under an all 34 EMA. So what market, Avi? I mean, there's a lot of markets out there. 50% on what? I'm guessing maybe the S&P. Yeah, let me know what y'all are looking at. Remember, our technical analysis has to be done on a specific financial instrument, but I'm probably guessing you're looking at the S&P. Cute question was on yes. Thank you for following up. Thank you for following up on that. How important is a 50%? I love a 50% on any time frame, but I'm going to kind of go back to what does the 50% mean to me? Is it simply a sentiment gauge where I'm bullish or bearish? Like I would use the 200. Is it an entry? And if it is an entry, what's the specific price zone or price level? And what's the validity for the trade? So that's what I'll always say. Avi, can we control risk from that level? And what does that level mean? Is it sentiment? The way I will use a line in the sand reading in the morning with the futures folks and my mastery folks, we're going to take a line in the sand reading to get a general idea of sentiment, because it looks like all of our indices are going to open up neutral. So I want to get a better idea of if I should be a little bit more bullish or bearish. Doesn't mean that's going to be a buy or a sell. So once we differentiate, is it an entry trigger or is it just a sentiment read, right? So what would be an example of a sentiment read? For those of you that use, say, market internals, right? That's a sentiment read. Short interest, that's a sentiment read. That's a general environment that price action is moving within, and I might have a bullish or bearish opinion of price action, right? Which might then lead me to be a buyer or a seller because of it. but it's not necessarily a trigger. Does that make sense? Great question. And I love the 50%. It's my favorite of the Fibonacci levels. 30, 382, 618, 786, 886, all very powerful. 23.6, but 50, I love a 50. Something about cutting a range in half is just so darn powerful. Hey there, Alan. Good morning. Not the GM ticker. I'm really literal sometimes, aren't I? Do I remember you correctly that there may be, oh, you're making me remember something I said? Luckily, I repeat myself a lot. Do I remember correctly that there may be volatile day trading opportunities tomorrow afternoon? Oh, gosh. Alan, the only things that I'll be doing on options expiration is looking in the afternoon for volatility that might close the distance to entries that I want in the daily time frame. I will not day trade on options expiration day. So what I like to do is not only look at my trading results seasonally, I like to look at my trading results, especially day trading, based on the day of the week and the calendar. What I found after hundreds and hundreds and hundreds of trades and frankly decades, there are certain days that popped out when I was looking at my trade results where I just didn't have a good win rate. And a not good win rate, gang, is anything under 50%, because anything under 50% is a coin flip, right? So once I start seeing that my win rate is, say, 50% or less, I've got to question whether I should be trading that day. My non-farm payroll is 53 or 54%, which means I win a little bit more than I lose, but it's kind of a coin flip. So I know on those days, if I just control risk in a very strict way, when I'm right, I'm going to be really right. But when I'm wrong, I can make it really a small loss. So NFP is one of those marginal days. I will tell you the absolute worst day for me. It's not for everybody, but I want to be as transparent as possible. The absolute worst day is end of quarter. My end of quarter win rate is right around 37 or 38. It's just under 40%, if I recall. That's awful. I personally have no business day trading that day. Everyone has these days. It's the liar who says I trade great every single day. Not true. Nobody does, because different environments cater to our different skills, right? So I'm just going to be honest and tell you. The next worst day for me is options expiration. Now, I'm not saying I want everyone to not trade options expiration, but do that kind of self-analysis and say, what are my best days? And so because I lead a group of traders, it would not only be dumb for me personally, but it would be irresponsible for me to say, hey, come follow me when my win rate for this particular day isn't even 50%. So no for day trading, yes for potential daily time frame, closing the distance to our trigger zones. Does that make sense as to why as well? So I really want to be straight up with you all. Nobody trades great all year long. Nobody just wins, although people love to act that way. I lose. I did a talk in the free trading room yesterday on how to lose better. That should be a book. In fact, I should write that book, How to Lose Better. That's what trading is all about. Not how to hit a home run, because you hit home runs, what's happening the rest of the time. So that's the way I look at that. All right. Smash a like button. Thank you, Ronaldo. Yeah, smash a like button for a little salty Raghee this morning. Hey there, Roz. Good morning. I had to stop trading because I was just trading purely on emotions. I hear you. Been there, done that, and incurring too many losses. Absolutely. I get that. And you're not alone. And kudos for being self-aware enough to realize that. But I've never stopped watching Charts and Coffee. I love what you do. Araz, there is a video. I don't know where the replay is. You know what? Hey, bot, can I bother you? I think I have it. Hey, again, give me one moment, because I do think I have it somewhere. And, you know, it was a conversation I had in the, again, the free trading room. And it was all about just some of the basic. Hang on, I'm going to send you a link, bot. Could you send it out to everybody in the free trading room and in the YouTube channel? I'm going to send you a link. I'll Slack it to you, bot. It was Trish did a great breakdown of my risk style. And this is sort of the foundational basic concepts of that. And I think I have it here somewhere. Oh, I will find it. I will find it because it was a really good conversation. And I think a really important one too. So I'll find it. If I don't get it to you all today, which it's looking like I won't be able to do that, I thought I had that stuff handy. But if I can't get it all to you today, if I can't get it to you today, somebody remind me tomorrow, and I'll send it to you. Araz, remind me tomorrow, and I'll make sure I get that replay out to you all. The 5 steps to risk. We'll definitely do that tomorrow. Okay. But yeah, definitely don't give up. And it doesn't sound like you have. You just step back and you're taking stock on what you need to do to control the emotions. Process is the only way that I know to keep them in check. Process is the only way that I know to keep it in check. All right. So remind me to rise. If I could bother you to do that, remind me tomorrow. I'll send you all that link into the YouTube and the free trading room tomorrow. All right. Hey there, Nick. How are you? How do you decide when to take profits and how much to take? First profit target, I scale out a half. It's always going to be support and resistance, Nick. It's never a dollar amount. It's never a percentage. What's my first profit target? And I scale out of half. Tony asked, India's market is outperforming the world. Can you buy the ETF? Country ETFs, Tony. Interesting. So there's a couple India country ETFs. I don't know that I like. Remember that it depends on the sector, it depends on the weighting, it depends on which stocks, just like we would in the US. You know, what sectors, what stocks are leading the charge higher. And let me see what I have on my list. So there's a couple ones. INDA. The other one I like to look at is, I think, EPI. And the most liquid one, the reason I brought up INDA is INDA is the most liquid. EPI is the second most liquid. And I can't say they're super strong right now. When we take a look at what's happening on the daily, I hear you. What I like the most is that, well, they are double green. So I totally see what you're saying. So Tony, buy the dip on EPI, buy the dip on INDA. I mean, that's what I would tell you. So good eye. They are quite strong at the moment. I'm looking at the weekly and I'm looking at the daily, trying to determine if I would be a swing trader or whether I would focus on longer term portfolio positions. Yeah, I like to buy the dip, Tony. Buy the ETF, right? Or you can, if they're liquid, and I'm taking a look at INDA. If they're liquid, you can buy the option. And let's see. They're not too bad. INDA has good liquidity at the 44 and 45 strike. Or you can just buy the ETF, which I agree would be the better way to go. Yeah, I would say definitely better way to go. All right. Profit Bringer asks, oh gosh, it's 9:23. I'll wrap it up with this question. Profit Bringer asks, some are projecting 1.0 rate hike. You know, if half these people, and thank you for the question, Profit Bringer, if half these people wanted to be responsible, which they really don't, they would be honest and say there's an 82% chance of a 3/4 point rate hike. There's an 18% chance of a full point as it sits right now. And that's the only answer. Although then, how are they going to sit around prognosticating what they think is going to happen? Right? So what are my thoughts? Doesn't matter what I think, my friend. It only matters what I see. And what I see is an 82% chance of 3/4 point as it sits right now. And it's really going to matter what we see on Tuesday. It's really going to matter then. Okay. All right, gang. Thank you as always for being here for Charts and Coffee. Let me get out of the way. I totally ran over. My apologies, free trading room. I'm super sorry. I lost track of time. All right, gang. I'll talk with you all soon. Be good to each other.